Welcome to the last episode of Traders Corner for 2013, and if you're not already deep in holiday mode, thanks for joining us this evening. As always, I'm joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Juliet.
Garth, so we're going to slope off next week on a holiday, but before we do, this evening is effectively a retrospective look at the trades over the year, the amount of gearing that you took onto the portfolio. So let's start off with the actual performance and just remind people how well we did.
Yes, well, yeah, I suppose it's nice to be able to sing this song again, but we discussed it last week. We've ended the year up 52% with the Traders Corner portfolio, and you can see the chart on the screen of the performance for the year there. The yellow line representing our Traders Corner portfolio and the blue line representing the JSE All Share Index. So you can see that we've actually outperformed the market significantly, and our 250,000 Rand that we started with at the beginning of the year has grown into 381,000 Rand. And if you had invested that same money into the JSE All Share Index, you would have made only 280,000 Rand. So we've outperformed by a factor of 101,000 Rand on that metric. But yes, this week's show now is to have a look at some of the analytics and statistics of how we achieved this and what sort of gearing and all that type of stuff did we use.
Well, let's start off with the exposure that you took at any given point, because we never had particularly big trades. So, you know, one chipped away slowly and steadily over the year to get to that gain. Yeah,
well, that's right. So what I've got on the screen at the moment is a chart that shows the exposure that we had on our portfolio at any given time, relative to the value of the portfolio. So if you have a look here on the y-axis of this chart, we've basically got the Rand value. So you can see we started our portfolio with 250,000 Rand at the beginning of 2013. Now this yellow line over here represents the total exposure that we had on our portfolio at any given time. Now remember, because we're trading CFDs here, we can effectively take a leveraged exposure to the market. So our 250,000 Rand, we can gear it up if we want to. But now the question is, how much did we gear it up and how aggressive were we? And it's interesting to look at this chart because the yellow line basically tracks the exposure at any given time. And you can see that, you know, at no time were we more than, well, the maximum gearing that we ever had on the portfolio at one point was 771,000 Rand. So, and that was at that point of the portfolio of 350,000 Rand is what it was worth at that stage. So that means our gearing at that point was around about 2.3 times. Okay. You can see also that there were certainly times down here where we went into negative exposure, and that's where I'd gone net short on our portfolio, and you can see that illustrated there. If we look at it in a different way, what we can do is look at the total gearing on the portfolio like this. Now this is a chart which shows on the left-hand axis here the level of gearing. Now if we have 1 times gearing, that would basically mean that we have an exposure equal to what the value of our account is at any given time. When it goes above 1, that means that we've got leverage on our account. So you can see up here we've been a few times where we went higher than 2 times gearing. In other words, we took our money and we multiplied it by 2 to get the exposure. And then, of course, there were also times where we had negative exposure, or we were effectively leveraged on the short side. So, in a nutshell, our maximum gearing that we had at any given time was 2.35 times on this portfolio, and then our maximum negative gearing, in other words, when we were short, was minus 1.12 times. And the average leverage for the full year, if I take all of our longs and shorts and combine them, average for the whole year was a leverage of only 0.78 times.
Now, you can take up to 10 times on a CFD, can't you?
Yes, that's right. And in fact, on some CFDs, you can gear yourself more than 10 times if you want to. You can get, on some, I think you can get up to 20 times leverage, which is a scary thought. And the thing is, what I want to really talk about here is the importance of getting this right, because so often CFDs and leveraged products or derivative products are advertised badly, I think, where the providers say, you know, hey, you can get X amount of gearing on your portfolio. Now the point is here, look at the very conservative approach that we took to gearing on this year's portfolio, where we had an average of 0.78 times leverage. Sure, we had times where we were more than 2 times leveraged on our overall portfolio, but the fact is we still made 52% this year without going aggressively leveraged.
Yeah.
And I think this is important right now, because I know last week a lot of people took a hammering in the market when it fell quite sharply, and they were net long, heavily geared on certain positions. And you need to really manage that gearing very, very carefully. It's so important. If you overgear yourself and the market moves against you, you can really get hurt.
I suppose, the other side of that is that if you're geared and you're on the right side of the market, you can make a killing. So maybe,
yes.
What are the positive effects of being leveraged against the market and trading in a CFD, a leveraged position, rather than just a vanilla share?
Well, the big benefit of trading a leveraged product like that is that obviously when you get it right, you can certainly take a bigger exposure to the market, and that can enhance your overall performance.
Yeah.
But you've got to combine that with a very strict, rigid stop loss and risk management philosophy like we do on this show. To give you an example, or just to show you a point here, those dotted lines that I've introduced onto the graph there, those represent the times where we had a futures closeout. Now, remember that throughout the year I've done a couple of those option structures which give us downside protection, put spread option structures we call them. And leading up into each of those futures closeouts, I was able to take a far more aggressive position, far more leverage. And you can see it there. Leading up into the March futures closeout, I got more leveraged. Leading up into the June futures closeout, I took more leverage. And then again, leading up towards the September futures closeout, I was also able to leverage myself more. And that's often the time where we actually benefited the most and where our portfolio grew the most. We had the downside protection in place, and that then enabled us to take a more aggressive exposure on the long side.
Okay. Garth, just as far as acceptable level of gearing for you, normally we trade 2% of the portfolio, but as far as leverage or gearing is concerned, what do you think is decent?
Well, I have a rule for myself personally with my own trading, is that I don't ever like to be more than 3 times leveraged. In fact, I battle to sleep at night if I've got more than 3 times gearing on my portfolio at any time. So that for me is my rule of thumb. Obviously, some people might have a more aggressive risk appetite, and they can up that slightly. But that, in my experience, has become the right amount of leverage to take.
Okay. Now, if we have a look at the trades, as far as the timescale is concerned, so taking us through the year from January to December, how does it look?
Yeah, so here we've got basically a calendar. Along the bottom axis here, you can see all the months of the year. And then these are the trades that we enacted, every single one of our trades throughout the year. And the yellow lines indicate the time that we were open in any of these individual trades, which is quite an interesting study to do. And you can see for some we were open for longer periods than others, and for some we were open only for a very, very short time period. The other issue, or the interesting thing on this chart, is how many positions did we have open as a maximum at any one time. And we never had any more than 3 positions open at any single time. And it was more or less here earlier in the year. You can see there was a time where we had Standard Bank and the top 40 and Netcare open. And then here we had the Anglo American, Tiger Brands, and a top 40 position. Yeah, but basically any area where you can see these yellow lines overlapping each other, that would indicate that we had more than 1 trade open at a time. And we never throughout the year did we have more than 3 trades open at one time.
Okay. Okay. So, is that for you? Is that quite key that you don't actually want to run too many trades at one point, because it just takes too much of your attention, or you can't really give enough attention to all the shares that you've got open at the time?
Well, there's 2 reasons for it. Yes, the first reason is the focus thing. I like to be able to focus on my positions, and if I feel that if I've got too many different positions running at the same time, then my focus is too diverted all over the place. So I have a rule in my own trading that I never like to have more than 4 open trades on at any one time. The other reason is also you've got to think about your overall portfolio risk. It's all very well to say, well, I've got 1 trade open and I'm risking 2% of my capital on that trade, and another one with 2%. But if you've got 10, if you've got 10 positions open, all of them with 2% of your portfolio at risk, and suddenly they all go wrong at the same time, which is often, unfortunately, what happens in the market, then you have a hell of a bad cluster on your hands.
Yeah.
And for that reason, I limit the number of open positions that I have on at any one time, because I want to also manage my overall portfolio risk in addition to the individual risk on each of those trades.
Yeah, don't forget the overall portfolio when you enter into the individual trades.
Yes.
And then you've got a slide up there on showing holding periods. I mean, that is quite interesting to see how long you held any one trade for.
Yes.
Not that long, really.
No, not very long at all. In fact, I was quite interested and surprised when I did this exercise to see the results. So our average holding period on all of our trades was 14.29 days. The average holding period for our winners was 15.5 days, and the average holding period for our losers was 12.5 days. Now, it's interesting, on the losers, we had two losers earlier in the year. We had Aspen and we had a trade in Netcare, which both ended up losing us money, and we held on to those for quite a long time, each of them in excess of 20 days. If we had stripped those two out, then our average holding period on our losing trades would have been much, much shorter. But the point is still quite good to make here, is that you want to cut your losses quickly in trading. When a trade doesn't work, cut your loss quickly, and you want to try and run your winners for longer. And we seem to have done that this year. Certainly we held our winners for longer than what we held our losers. And that generally is a good practice as a trader.
I mean, one of your goals for this year was, knowing when to sell, which I know that you feel that you haven't got right yet, or I mean, maybe you never get it right, But that slide actually shows you moving, hopefully, in the right direction.
Yeah, absolutely. That's right. And I think that there could be a case made for potentially holding the winners for longer and maybe trying to extract more out of them. And that's something we can look at working on next year.
And of course, this is a trading show, so someone investing would say, jeepers, you only held it for 14.3 days.
Yeah.
For an average trader, would it be a shorter period than that, or does it vary?
It varies, because you get intraday traders, people that will only hold a trade for a couple of minutes or a couple of hours. Our style of trading for this show, because we broadcast once a week, we look to try and hold our shares for a couple of days to a couple of weeks, maybe even a couple of months maximum. And that's where you get an average like that.
Okay. Garth, so that's the retrospective view of the portfolio. But we also have a trade that you want to look out for in the weeks ahead, potentially, and that is the Rand.
Yes, that's right. I'm not going away leaving the viewers without something to think about or to watch. So I want to keep an eye on the Rand-dollar exchange rate over the festive season now, and as we approach January. On the chart at the moment on the screen is a chart of the Rand-dollar exchange rate over the last 2 years, and you can see that there's a very steady trend of Rand weakness over there. What's important right now is this 10 Rand 50 level. You can see how the currency has bumped up against that level a number of times recently, and you can say that we're almost making an ascending triangle structure here. And if we start to see a move out through 10 Rand 50, that would be quite bearish for the Rand, and it could then push us out towards 11, maybe even 11 Rand 50. Now, what interests me particularly now is that there seems to be a seasonal pattern that I've picked up on the Rand, which plays out almost every year, where the Rand weakens quite sharply in the first couple of weeks of January. It's worked in 9 of the last 11 years. And that chart on the screen at the moment basically shows you the performance of the Rand between the 2nd of January and the 20th of January each year since 2003. And you can see how in most years the Rand has weakened quite sharply over that 3-week period.
Yeah, these are not small moves.
Yeah, and the average move for the Rand over those 11 years has been negative 6%. Over a 3-week period. So what I'm basically saying is that if we go back to this chart and look at it, if we start to see any more consolidation in the Rand dollar over here, I'm going to start looking to initiate Rand shorts and use a currency future to do that, in the anticipation that if this seasonal factor does play itself out again, we probably will see a move through 10 Rand 50, and that could be quite a violent move if and when it happens. So I'm going to be watching that over the festive season. It possibly could even be our first trade for 2014.
Because presumably also trades, positions, moves rather, are exaggerated this time of year because volumes tend to be quite skinny. So that may also be a factor.
It could also be a factor. But certainly it's interesting to note that seasonal aspect. And I don't know if there's a fundamental reason behind it. There might be. But it's interesting to note that the Rand often seems to weaken in January.
Oh, well, good for all the foreigners enjoying themselves in South Africa, I suppose. Not so good for any of us who maybe going overseas. Garth, we have to edit there. I know you want to wish everyone, happy festive season or happy Christmas.
Yes, well, yeah, season's greetings from Traders Corner. Yeah, just thank you to all the viewers for watching this year. We've been at this show for just over 4 years now. It's really, I think, going well. We've got a good traction with it, but it obviously wouldn't be where it is without the support of the viewers and the support of those people that subscribe to my website and so on. So big thank you to everybody. It's been a good year. Have a good rest, and we look forward to coming back in 2014 refreshed and ready to take on the markets again.
Rearing to go. Garth, have a lovely Christmas and good holiday, and we'll see you in the new year.
Thank you.
That's it for Traders Corner, as I said, for this year. Good evening to you all, and we will see you back in January 2014.